This is Taking Stock on Bloomberg. I'm Pimm Fox. American investors proceeding with caution now when it comes to China. Bloomberg News has learned that hedge fund manager John Paulson, he's going to hire a specialist in Hong Kong after losing nearly $500 million last month betting on the shares of Sino-Forest. Meanwhile, the SEC is in talks with Chinese officials seeking the right to more closely scrutinize companies inside of China. Here to talk about the regulatory implications is Lee Pacchia. He is a legal analyst and host for Bloomberg Law. Lee, good to have you with us. Before we get on to the details of the SEC, I just want for people to understand the bet that John Paulson, hedge fund manager, made on Sino-Forest. What exactly happened there?
Oh, I can't speak to that, but I certainly know for sure that the SEC wants to get involved. He
lost a lot of money.
Right. It happens. That's life. The SEC wants to get involved. They're basically having talks with their Chinese counterparts, asking for permission to investigate something like 110 Chinese-based auditing firms. These are the firms that are ultimately responsible for making sure that Chinese-based firms that are
listed in the United States
have to go through their proper disclosure procedures. Obviously, something's gone wrong. There's been something like 24 accounting scandals involving Chinese-based companies traded in the United States over recent months. They'd like to get involved, and they would like jurisdictional extensions, so to speak. So
jurisdictional extensions.
I guess that's
that's why you work at Bloomberg Law, because you know about those fancy words.
So,
what does that mean, jurisdictional?
They want to investigate companies in China.
Well,
can't
they do that now? I mean, if you got American investors who
not
feel
without
that they've
the
been
Chinese
defrauded.
government allowing them to. I mean, there's
they want some kind of blanket. They want some kind of blanket acceptance, or can't they do this on
they're hammering out now. It's very hard to see what the final deal is going to look like. We know that they're currently talking. It's probably going to be a joint venture arrangement between Chinese regulators and American regulators. But there are strong incentives on both sides to make sure that a deal gets done. Chinese companies want access to American capital. At the same time, American regulators want to make sure that there are certain safeties and precautions protecting investors over here.
But don't they already exist in terms of listing requirements, or is this really being highlighted because of the extensive use of reverse mergers, the idea of using almost like a shell company?
Sure.
Instead of going through the initial public offering route, you use a shell company, you back into it, and voila, you've got a company that's listed on one of the exchanges.
But ultimately, it all depends on the integrity of the Chinese accounting system. So that's what we're talking about here. Assuming a deal gets done, however, we're opening up a Pandora's box. I mean, it's a simple solution to a very specific problem, but then one has to wonder, does China want ultimately the ability to come into the United States and investigate American accounting firms or firms that want to be traded on Chinese firms? It's not happening yet, but it could happen someday, right? It's not too far-fetched to think that that might happen.
So this idea of globalization is now turning into the law of unintended consequences.
It could. You also wonder who's to say that American regulators wouldn't want to go into Brazil or India to get similar powers of investigation.
What about cost? I mean, we've heard on a regular basis that the Securities and Exchange Commission does not have the amount of money necessary to enforce even the rules that already exist in the United States. Would this distract them and take resources away from that mandate?
One has to wonder. We've been talking for almost a year now about how much they have to ramp up just to get up to speed on Dodd-Frank regulations that are coming online. They need to go out and hire many attorneys and regulators just to fulfill those tasks. This certainly looks like a big undertaking. One has to wonder how they would pay for this initiative.
What about legal representatives here in the United States? I mean, couldn't they just say, all right, if you want to be listed in the United States, your auditing, your legal work has to be done by some kind of accredited organization in the U.S.?
That's a good question. I'm not sure quite what the answer is. I'm sure, look, this is a very big marketplace, and participants have been trying on both sides to make sure that it functions smoothly and that Chinese companies can access American capital. One has to wonder if that would have already happened.
What about the SEC? What do they say? Is there a deadline for when this is all going to play out? No.
I haven't seen a statement from them on this yet.
So the negotiations continue?
We'll have to see how it goes.
And you continue to follow it for us?
Right on.
Thank you very much.
Thanks,
really
Bill.
appreciate it. Lee Pacchia joining us from Bloomberg Law.